Welcome to Morning Markets. I'm Andrew Bell in today for Amber Kanwar. Here are the big stories we're bringing you from the BNN Bloomberg newsroom. Pierre Poilievre says the federal government should block the $13.5 billion takeover of HSBC Canada by Royal Bank. The leader of the Conservative Party says approving the transaction would probably result in higher borrowing costs, especially for mortgages. In an interview here on BNN Bloomberg this morning, Poilievre said he was confused by the Competition Bureau's approval of the deal, and he feels it's unlikely that HSBC would abandon its customers if the takeover is blocked. Paul Bagnall will have more on this story in just a few minutes. Despite the pinch of rising interest rates, Canadian home prices keep going up. September's Terranet National Bank House Price Index was 0.7% higher compared to the previous month. And that's the fifth straight monthly increase. The hottest markets were in Halifax, Ottawa, and Victoria. Retail spending has essentially been holding steady here in Canada. Sales slipped by just 0.1% in August as activity slowed at auto dealers and grocery stores. StatsCan estimates that the retail sales total in September was unchanged. And let's have a look at the markets. The TSX, is now in negative territory. If you don't count dividends, it's down about 0.8% so far this year. The S&P 500, let's check in on the U.S. stocks. It too under pressure. The S&P 500 is up still about 10.5% this year. The Nasdaq is ahead about 24%. Markets are down this morning, continuing declines that we saw yesterday. Our guest says volatility is not going away. He has some stocks, some top ideas that are aimed at surviving the storm. Michael Landsberg is Chief Investment Officer at Landsberg, Bennett Private Wealth Management. Thanks very much indeed for joining us.
Oh, our pleasure.
Before we get into your ideas, what do you think is pushing stocks down, if you could, one or two main reasons?
I think realistically, a lot of times the Federal Reserve has kind of been dictating kind of where we've gone with interest rate policy. And I think there's a lack of confidence in their last decision not to raise rates. They said they'd be data dependent. The data was from inflation seemed to accelerate. We see that with the price of oil. And the bond market just said, we're going to raise rates for you. I think the bond market's lost some confidence. And I think the stock market's following the bond market's lead in terms of not having some confidence in where we're going in terms of interest rate policy.
Give us that again, Michael, because obviously this story, this run-up in bond yields has been so important. Why have the bond yields gone up?
I think the bond market's figured out that we do have some issues ahead of us. We certainly have an inflation that's reaccelerating, and we have an economy that's slowing. I mean, realistically, in the U.S., the GDP number has been kind of goosed by government spending. We've seen private consumption, private spending going down. So it's not as though the economy is really robust here. It's basically the government's been really robust with the majority of the spending to keep jobs, kind of where they are. And obviously, inflation's reaccelerated. People are kind of wanting to see cuts, and I don't think you're going to see cuts for a while, simply because the only time I think you're going to see cuts if we went into a deep recession in the United States. I don't see a deep recession, but we're in the midst of an industrial recession, and the consumer's starting really to pull back. You're seeing excess savings go away, so I think it's problematic for consumer-related parts of the U.S. economy.
During COVID, we didn't literally see helicopters flying around dropping cash, but we did see the government just handing it out. Yeah. Let's get to some names. United Healthcare, people are going to go on getting sick. You feel it offers relative stability?
It does. I mean, it's one of those, they have right now about 1 in every 5 Americans that has health coverage uses United Health Group. So it's one of those things you kind of have to deal with them, whether you want to or not. And they've got a great management team. They grow the dividends every year. Earnings have gone up. I think they traded off or flattish this year a little bit simply because there's a little bit of rumbling about, the GLPs, these glucagon-like peptides that are being made by companies for A1C to lower sugar that are going to be ultimately available for weight loss. I think there's some concerns around how much, that's going to ding some of these insurance companies are going to have to pay. But historically, United Health has done a great job, great management. And to me, it offers an opportunity here as people are going to continue to get sick and they're going to need coverage. They happen to be the best in class.
That's an incredible chunk of the US population, that they deal with. Arthur J. Gallagher, active in the insurance industry. Why do you think they are a relatively low volatility name?
Well, I think what they've got is Gallagher's an insurance broker, not an insurance company. So they make money by placing, insurance policies for actually companies. And what's good about that business is they don't compete, look for the S&P 500 clients. They look for middle markets where there's not as much competition. And as premiums have gone up, they make money. They're not in the business of paying claims. So I kind of liken it to a Visa or a MasterCard who doesn't really care if you don't pay your bill. They get paid kind of on the flow, on the transactions, and the bank underwrote the credit. Arthur Gallagher basically puts people into insurance policies that, they're not the insurer, they're the agent or the broker, and they do well in that environment. And I think that's going to continue. You're paying for their expertise to put you in the right product. Insurance has gotten more and more complicated. They seem to be a company that can deliver and deliver over a long term as well.
S&P Global, they make money, among other things, from compiling indices and also debt ratings, I guess.
Yes, debt ratings is still a big component of their business. They did a merger with IHS Markit a year ago, gets them into some other areas as well. People in the U.S. are familiar with Carfax. They're in that business as well. But basically, the financials we don't really like. We like some of these data service providers that provide financials with more data. More data is more important to make better decisions, whether you're lending out money, whether you're going to buy a car, whether you're going to buy a bond. More data is better, and the companies that can provide good data are in an ability or in a place to be able to charge premium rates, and we think that continues for them as well. So in a bull market, I don't think people have to worry about ratings as much, but when you get into some choppy markets, you want to make sure your data is right, and S&P Global has a great market there.
Monster Beverage, why do you think they're promising?
Monster Beverage is an energy drink maker, and part of the thing, that market's really exploding in terms of size. Now, with that being said, there's more competitors in the market, but Monster's been a long-term story that's delivered growth and growth and growth kind of consistently over the years. What we really like about it is their ability to, kind of leverage the Coca-Cola distribution. It doesn't matter where you can go to some small convenience store in the middle of nowhere. If they're selling Coke, oftentimes Monster's, in there as well, which we think that distribution is a great distribution. But people are looking for alternatives besides just sodas, things like that. I don't want to say it's healthier because it's certainly not, but versus traditional sodas, these ideas of having some energy, most people, are underslept. So we think it's an opportunity there. Great marketing team, and a longer term, it's been a great management team that's delivered a lot of great returns. This just happens to be a year they haven't done anything yet. That's really what we're focusing on. What is lagged that we can look to take advantage of?
One of our celebrities up here is Jordan Peterson. I don't know if you've come across him. He's a therapist with controversial views. But he says, when I'm dealing with patients in my practice, the first thing I ask them is how they're sleeping.
Yeah. And it's an epidemic. A lot of times, I think people don't understand the sleeping and what you're eating, but most people don't sleep the required amount of time, or their sleep is lousy. And unfortunately, they're dragging during the day, and they reach for a Monster beverage to be able to kind of keep them through the day. I'm not saying it's a great lifestyle, but if we want to own the stock, I want to own a stock that's going to keep people awake at the job.